We touched this. We touched this. Look what happens when I touch a long-term EMA. It just goes. Look what happened when it did here. Boom, it goes. So be mindful of the levels. Just be mindful where we're getting. So just to give you guys the heads up, I'm watching. I'm watching. I'm closely watching. I want to see. I believe there's still downside, so I don't care about a put playing it to the downside. I'm waiting to snipe this to the upside. But we're gonna be patient here. So QQQ, same thing. Uh, IWM start looking at too, but QQQ, IWM has more problems on the horizon too. If you start hearing about rate hike chatter going around now, you got to be careful with small cap stocks and the likes that need loans. So now look what QQQ is. So expect a reaction here. Expect a reaction. I expect to come down. I expect it. Will it happen? Maybe, maybe not. This is why we're going to watch this reaction here. Look where we ended the week, right at the bottom of the range, right here. So next week, what can happen? Possibly, boom, nice pop. We'll see around 570 level, 574. What happens? A lower high, let's go. Right back down to test the level and possibly break under and continue strength down. We still have a little bit to go to be safe. This is still catching a falling knife. You can see it right here.
Someone
We have
asked you what was
no
the
sign.
levels for the alert. My fault, Rams.
For the alert for SPY, start looking. As soon as you see that 615, put an alert on 615 so you know you down there. That's only like 17 more dollars or so from where it is. So look at 615, but from 610 to 601, you want to pay attention. You want to pay attention. If you can see that you got strength, let me go to SPY because I'm talking about SPY, but I'm on QQQ. So you see, if you break down and you start getting, you break down this level, right? Expect a pop. First and foremost, expect a pop because buyers need to see. Buyers need to try to come and defend this level next. They're just not going to lose this unless we just break down and fall. If something happens over the weekend, if breaking news comes out while we're on Zoom, it can most definitely just break down and fall. But say we just keep going with today's action, fine. Boom, it closes. Next week, expect a dead cat bounce and then see the reaction this level. This is going to be a level of interest right here, your 640 level. That is the anchor VWAP from the Trump tariff lows. If we reject here, we are coming to retest this 630 area. Once we fail, I expect us to slowly grind down to that low 600 levels, which gives us this floor. Look at my white line. You see my white floor right here? That's what I want to see. Will it go all the way down there? We will see. Can it touch this area and go? Most definitely. And wick in here, bang, and just go. It can. That's why I'm telling you. 615. You see, we break under that 630. Have that level map. 615, 610, 603, just to be safe. Because once you start getting into this whole structure right here, this is when you can have a nice rally. A nice rally. And even if it fails, it doesn't matter. Even if the rally comes from here all the way and collects all this liquidity, start chopping here, you got massive gains. Before it chops, and maybe the end of the year, war, whatever, it starts easing and then it goes. Now it goes. Like the market always wants to go up, right? Over time, market always wants to go up. It's designed this way.
Someone has a question for you, not to cut you off.
Yeah.
They want you. Alex said, "Could you explain the dead cat bounce?"
A dead cat bounce is just a sell the rip. It's a sell the rip because you can see that momentum is to the upside, it's to the downside. Look, you broke key levels. When you broke this, it was over with. You already got a dead cat bounce, which it ripped and they sold off. Sellers came in, boom. Then you broke another massive structure level right here, right? Then you run up, they sell the rip, and now we're here. Now we're right here at the cusp of this level. Once you lose this, you got to expect, even here, look, you're at structure. It's an area, right? It's that area. You're in the area. So right here, you can expect another bounce, another relief rally, a dead cat bounce, if you will, to come and retest, to try to reclaim this anchored VWAP level that I have right here. So what I've been doing with my anchor VWAP, I have TTL, Trump tariff lows. So what I do is if this runs up, I've been moving it up, up, up with my anchored VWAP, right? So now buyers have to come and try to reclaim, right? To try to keep going with structure, boom, and possibly go, right? That's what you would expect. But you need to expect, look where I have my 9 EMA. And on the daily, we just crossed right here under the 200. We retested it, failed, but we failed right at the 9 EMA, pushed it down. So, okay, now we're getting a little extended from where price is to where the moving average is. So now you got to expect, yeah, can it go boom and then come and test it? Sure. But now you're all the way down. Price, EMA, right? So now you don't get from price here to your moving average. Okay, you could have possibly said, okay, maybe we can come and retest and see, but it didn't do it. So now look where you're at from the EMA. Move it from your moving average, the moving average of your choice. But this is one of my magnets, my price magnets. So at some point, I expect buyers to come and defend this level because now my 9 EMA, when today closes, if it persists, right, my 9 EMA is probably going to dip a little lower. So now buyers come in, failed rally attempt, possibly. I'm not saying it's going to fail. You just got to watch the price action. And then let's say, boom, you keep coming down. But now you have this level of interest here because from here to here, what do we have? From right here, the top of the structure to where price is, flex. No. Hey, no. Sorry. It's about 3%. Let's do it this way. I don't like doing it like that because we're still going down. So I want to go in the direction that we're
The
going.
600 and back down is the question.
Yeah. No, 600 and bounce. You gotta see how buyers are gonna protect this level. So if you come all the way down, you have another about 5% to go in the broader index.
So, I didn't mean 600. My fault. 660. My fault.
Yeah. That's what yeah. So you're gonna expect a bounce around this area, around that 650 level. 650 level. And you're gonna see if it's going to reclaim the level or if it's going to fail. If it fails, now you already know, all right, boom, it's structure. Look, lower high, lower high. If it fails here, lower high, down. So you can expect that 5% retracement from today's price. Still. And now what you want to see is what's the reaction here. I am not saying to just close your eyes and buy here or at 600. You need to watch it here because there's still levels of structure here. Now, if SPY is going to follow, right, structure that it has done over years and years back, then we should expect a nice bounce if we get down to this area. You could say, okay, it could be a dead cat bounce, right? But chances are it's going to bounce and start chopping somewhere and bounce, right? Because now buyers are getting a discount, right? Or what they see that this floor is and where it came from, what it represents. Remember, these levels are psychological warfare levels. Somebody made money here, right? But somebody also went long and lost money here. A lot of stuff happened here. This is all war scars. So that's why when price comes into levels of these interests, you get that chop. Because price remembers. Now we look at things like volume, meaning I use certain things to determine how the strength is looking, right? So now if you look here on the daily real quick, and I'm almost done with this quick recap. We'll end it with SPY and we'll continue with the watch list. But what I'll do here now is say, okay, well, I see that from the bounce, right, to this, I see that here sellers are slowly, they're still in the game for sure. And they're still convicted for sure because the volume is still at average or above. But I can see that their steam is starting to to slow down, to weaken just a little. But that little steam that weakens here just gives me a nice pop, right? That it can possibly be rejected. Do I want to chase the pop? Absolutely not. Can you? Sure. If you want to, if you see reaction here and you can see the reversal and you want to take the pop and take the ride to fail the next lower high. Now, will I do it? No. I'm not chasing the market up and down. I know where money's concentrated right now. We're still in energy, utilities. So I am not just chasing every move. Do I have problems with puts? Not at all, not whatsoever. Now, is it worth trying to get a put all the way down? Maybe. Am I going to chase that? Not at all. But that's the game plan for SPY. If you do see a rally, don't if you're not trying to catch it while you're at that 630 level trying to watch that reversal, you should leave it alone. You should leave it alone. Don't play the downside because this stuff is getting very ugly. Like it's not giving nobody a chance. And the rallies on SPY, they're weak. They're super weak. Like die out in a second. In a second. Like it's not even a sell the rip at this point. It's just sell the pop.
Get smoked. That's what it
Yeah.
is.
So that's all I got for that market recap. And just for next week, watch for next week. Watch next week. Watch SPY. Watch QQQ. Watch next week. Don't chase the rallies, but watch the top of the rallies. Watch for rejection. And that way, if we reject, we know we're waiting for a nice area to react.
We
So
got
that's
that.
all I got for that.
Okay. And I think that's the next segment, right? For
Yeah, watch list.
next or hold on. Then we have one for a recap for next week, or is that after the watch list?
Um,
Damn, where did we could recap tomorrow? Did I text it to you or no? Market. Oh, the market map for next week. The weekly cap. So it's weekly cap, the market map for next week, and then the watch list rundown. I'm looking at the YouTube post. I see it on the YouTube post.
so
Thank you
look,
for
even
that.
on
Andy.
NQ, look, even on NQ, you see it right here. Same deal, right? The only thing that happened here different, it was that you were inside of this range right here. That's the only thing. But look, you finally broke. It broke here. It came to retest. It failed, right? It failed the reclaim, and we're just breaking down. Expect another quick, nice little rip. Oh, and see reaction here next week. This is what you're gonna want to watch for, especially Sunday when futures open. Watch NQ, watch ES. See the the sentiment in the market after this weekend. After all the news drops, after all the geopolitical, let's see. Another bomb drops or not? Is it quiet out there? Is it getting it's still loud? Let's see what's going on next week for NQ. Let's look at IWM real quick because let me see
Oh,
something.
we're not even gonna wait. You still doing the weekly recap?
Yeah, real quick, just to get
All
it
right.
something
No,
complete.
no,
I'll
no.
finish with IWM real fast, and I'm
No, you're
done.
fine. I thought you was just moving to next week market map.
Oh, nah. Just real quick. Hold on.
No, do
So
your thing.
I
Do
look
your
with
thing. Do your
even
thing.
even with
You got mad time.
IWM that even with IWM on the daily, right? IWM is the strongest of the bunch right now. But like I mentioned before, you gotta watch out with this chatter talk with the rate hikes. We gotta see what this new guy is gonna do with Powell, how they're gonna interact with each other. So now IWM here is It's on the hairs. Look at the structure. Same thing. Lower high, right? You broke from the very top. You already came. You're retesting certain levels of supply, right? You're starting to break. You got the 200, daily 200 right here. This can give you another chop moment to see
Candle
how we're
maker.
going to deal.
I said Rams, make your candles bigger. I guess your lines is messing with their eyes. It's
Really? Like,
daily too, or you might just show them on a 1 hour.
I'm trying to just show you structure. That's why I do this, right? But if you want to see the day to day, that's fine, right? Is this good?
I
So,
mean,
so
yeah,
I'm
that's
gonna be done real quick. This, so you see, look, even here at 250, look at the rejection. Now the volume is not super high. It's not above average. It's below average. So you can expect, right? You can expect. Look, the volume is winding down. We're at the 200. Buyers will defend this 240 area right at the 200 SMA. So expect some chop here, and let's see if we fail. Then we got 239 to 235, and of course we're gonna be watching that 230 level, right? So watch for more downside. Don't just see a rip early next week and think, oh, this is it. Just because the news might seem a little bit. It's not always what it seems with the market. The market always overreacts first. So let's pay attention to the structure, right? You break, you already look, you already broke this massive level of structure right here. You already attempted a rally that failed right at the 20 and right at the 250 level. So you don't have to guess. Oh, are we just going to rip up? Highly unlikely. You're trapped between 250 and 240. You got to watch some chop and see if we just fail this level down into structure. We already are on downside. We broke structure to the downside right here. Failed rally attempt right here. Next level of structure. Let's see what happens. Next level of structure. What does happen? These are key levels where structure meets the road. Ceiling, floor, ceiling, floor. All right, so I'm done with that.
okay.
Go ahead, take it away.
That's okay. Angie put the segments there for us too, which is so good because we be thinking a lot, so sometimes it'll slip our minds. What we got going on. Okay, because it slipped my mind. I forgot all about the next week market. So yeah, Alex, and like from what I say with the dead cat bounce is like Ram said, and a simpler way is it's a relief rally. So when you sell off so much, like just imagine you running for so long. Eventually you're going to get tired. So that's the exhaustion phase. So when you're tired, buyers have a chance real quick to step in, but it's not a full on reversal until you start breaking structure. It's just a breather for sellers. They just took their foot off the gas for a little bit. So that's all a relief rally. It's just so much selling pressure. Like if you see the index drop by like 3%, more than likely then overnight or the next day, you're probably gonna get a little pop. And that's what you call like a bull trap a lot of times. And then there was one more thing. Let's see.
Hey, Ed, can I ask a question real quick?
Yes, Angie.
Do you identify that by the volume going lower?
I don't look at volume.
Okay.
But
So how do you identify the dead cat bounce rather
you can
than just
look.
looking at it like another gap?
I would suggest you look at the volume, but that's Ram's lane. That's not my lane. I look at the candles. I'm going from the 1 hour, 4 hour daily, and I'm looking at this how the candles are moving. But the volume questions, that's definitely Rams because The volume on my Webull thing, but I don't really pay attention to volume. I might look at the average volume sometimes and stuff, but for like just like trying to get used to it, yeah, you got to look at the volume. But that's a question for Rams for sure. About the volume. So Rams, do you know? Well, I know of course you're going to see the volume weaken, but what do you really look at on the volume bar?
When I'm looking at the volume, I'm looking at the candle context, just like you. So you see the same way you can read the candle. So I read it along. I just pair it with the volume, so I can see the size of the volume and what candle is it? Is it a hammer? What level did this happen in? So I'm not looking at every single bar, but I will look at the last 10 to 15, 20 bars. Read the story, pair the candles, pair the volume. Do I have strong candles? Because I can have a bullish candle, a green candle that has a long wick on the top, right? So then with high volume. But just because the candle closed bullish, that means sellers stepped in there. So now if you got a run up, and you see in the first run up, that first massive candle, and then it starts rejecting, and then you run up again, that's the first clue. That candle, it came with high volume. That means sellers, big money, might have just stepped out into strength. They sold into strength. So that's just a relationship and price with volume, price. So it's just a little thing that I go by. It's my strategy. It's what I look at. So every trader, we all have different strategies and different things that we look at. So you see, even Ab mentioned you can most likely see a bounce, and he says sell the rip. But then when I look at I see the same thing. We're just reading in different ways. So you got to find what you like and what you know how to read, what's comfortable for you to read that gives you the story, the context between buyers and sellers and key levels and the relationship with structure. Once you start pairing all these things, you can start to see. Does that explain your question?
Yes, sir. Thank
Okay. All right, take it away.
Can't hear
You're
you,
on
Al.
mute. You're on mute.
Thank you, bro. Can we mark a chart with you so we can see what you see before the lines? The story's good, but the lines can blur you. Javis sent that when you was talking, but I was saying that we could do it on the participation, where we could really start locking in because we gotta go through. We can't spend too much time on the segments, but participation we could start like really going in, and Rams could show you how he put support and resistance is what it's called. How he put his support and resistance lines, and I can show you how to do mines, and then hopefully we have a volunteer that could show their chart, whether what they're looking at or something like a question that they have. But we need somebody to show their chart. Last time we had
Lakia.
Lakia do it. Yep, it was Lakia.
And Alex did too with that futures trade.
I forgot to ask you, Lakia, in the Discord. On MU, would you ever? I know you sick, but
you. Here.
I was about to talk shit, but I'm gonna stop. But you don't feel good, so I stopped myself like right away, and I'm not good
No,
at that.
I came out. I was able to exit. It was a small profit, but a profit nevertheless is $500, 522 or something.
What was your percentage though? The money I don't care.
Oh man, I don't remember.
Okay.
Yeah, I don't remember.
All right. Well, you made some
but
good
I made
money.
it out alive. I became untrapped.
That's a lot of money.
Yeah.
That was good. Yeah, everybody was asking. There was a lot of people asking in the comments. How Lakia, like, how much did she do on the MU play? That was good. That was real good. I kept forgetting to ask you. All right. So, so we'll just we want somebody else besides Lakia to show their chart and stuff. Like we said, We could lead you to the lake, but we can't help you fish. I'm not holding your hand. And that's why I'm like, all right, let me break down SLB and stuff. And our main thing is to talk about structure way more. So next week, next Friday, is going to be Talisha and Rams. They're going to do the class, and it's going to just be market structure. That's it, because we're not going to be holding your hands at all. Yeah, no, that shit's annoying, and it's just like, why you trust me so much with your money? I know I don't trust nobody with my money, you know. So you need to be able to see what we're seeing and why we're saying that. Oh my God. So we're on market recap. All right, so I'm gonna start off. I'm not even gonna do futures. I'm gonna get right into SPX. What is wrong with my shit? My trading view is okay. There we go. This is bad. This is real bad. All right, so I don't know. I know it's probably some new people on here, but we had measured a few weeks ago. Well, yeah, a few weeks ago, we measured a potential inverse cup and handle coming. We caught it like right here. And you could see when you're doing this for a long time, you'll be able to see patterns before they even form. So we seen it like up here in January, February, something like that. Long time ago. Long story short, it played out. And then it confirmed because it just broke the neckline. Our neckline was our rectangle box right there. Once you break that, you wait for the retest. So you broke it right here on let me get it in. I think I gotta delete some lines. What is this? My AV out. I'm just gonna delete it. I know there's some new people in here. I don't want y'all getting confused with all these lines. So you break it right here. Most traders get in, then it pops up and you get smoked. So you wait for break and retest. So and it's going to happen about 2 to 4 times. This could happen where it keeps faking you out. So break out, then boom, pop back in. Then break out, then boom, pop back in. Then break out right here. But you didn't get no retest here. Sellers are in control. So long story short, we broke down, but we didn't get the retest. Why? Because the 5-day moving average met it like right at my rectangle. It didn't give it no chance to even get his little stink behind back in there. It just smacked it right back down. That's the 5. That's the 10. That's the 20. These are in order now, but the 200 is not. So this is the daily. So when you see it 5, 10, 20, 50, 100, 200, they're in order. It's just the opposite way, but that's how you want it for selling pressure. That's a strong trend. And if we're trying to go up, we want it 5, 10, 20, 50, 100. We want the top to start at 5, then 10, 50, 100, 200. You want them stacked in order. That's when you know you got a full trend. So right here, I could tell you the 5 right here, the 10 right here, but we have the 200 right here. So that means we have a long way to drop because the 100 has to cross down this 200. So that makes sense though, because we're aiming for that 610 area on SPY. We measured the inverse cup and handle. So this white trend line, not horizontal, this white vertical trend line right here is where we measured the pattern, and it comes down to here. So that's about 610 on SPY. I think we got another one right here. Boom. That's about 5. Well, 5. I think that's like 590. That's about 600. We'll say 600, like around there. 6,500 was the level that you had to hold. Once you broke that, you're completely in seller's territory. You're not going to get too many relief bounces no more. So that's why Rams, what he said, like there's not even. Remember, I was saying seller rip. That seller rip was the phase E. This is wick distribution. We're not in that phase no more. Now we're in the last phase where it gets nasty. You don't get much chances. You got to be able to see these moves before it happen. Like if you notice, a lot of times Fridays sell off, but you don't trade like this. Fridays sell off, Monday might bounce. It's been happening weeks in a row, and a lot of people has been gambling like that. They'll get in calls at the end of Friday, and then that shit they've been playing out real good. Where was I at? But I want to show you real quick. I'm gonna start flying through my SPX, my QQQ, and stuff. I ain't gonna lie. Let me go back to what was that? 6,500. Okay, I forgot what I was talking about with distribution. Because I don't think too many paid attention to this, but this is so important. Man, I post a lot. I hope y'all are reading these. I post a lot. And I promise you this will save your account. Who consistent like that? It's just a lot of time researching, staying up at night, and writing. But I love doing this though. What the fuck is going on? If that should make me start over, we just not gonna see it. That's crazy. All right. I could just search it. Wow. Why didn't nobody tell me that was there? Damn, how did I spell it? I thought I spelled it like that. I doubt I did with an I. Oh, it's just gonna. Oh, okay, just show you videos. But there's a Wix. I don't know if somebody could go on there because I don't want to spend time. Because somebody go on the post and just like go all the way down and find the distribution thing. Well, where's the disc? I had it in the Discord. I don't want to show y'all that, but I really wanted to read that to you though. It's important. Shit. If it click on something though, again, I ain't gonna lie, I ain't doing it again. We on here till 4. If y'all on here till 4, but so we got time, and I'm gonna run through my my market recap. It's just so important that y'all see this right here. Many people don't know what this even is. I try to give you stuff that you never heard of. That's why I like showing so much data. Golly. How much posts? And I don't know if y'all posted. Yeah.
Pat is saying that it's on your Bitcoin post.
No, I'm looking for a different one.
Okay.
It's
So the
called
Wyckoff distribution was on your Bitcoin slide. That's what the thing
on my
said.
Bitcoin slide.
That's what Pat said.
Okay. No, it's literally a chart. I mean, a thumbnail that shows it 2 months ago. Was it that long ago? It literally says Wyckoff distribution, but I think I'm close to it though. Right here, boom. Whew, shit. Like, damn, nobody could help me? It's all right, I got it. You want something done? Let me see. Let me see something real quick. That explains. It's all women in here. You want something done yourself, you got to get it done yourself. You know what I mean? But there's men on there too. Y'all could have helped me though. It's crazy. Made me do all that. All right, early in the year is where risk quietly shows. So this was 2 months ago. Not to toot my own horn. So early in the year is where risk quietly shows up, not through one headline, but through structure. This is classic Wyckoff distribution. Phase D is where support falls and rallies start getting sold. Phase D is where support fails and rallies start getting sold. That's when I kept saying sell a rip, sell a rip, sell a rip for QQQ, sell a rip. Phase E is what comes next. the markdown. No more range. No more dip buying. Just price, discovering lower value as liquidity tightens and leverage comes off. I believe this transition begins within the next 2 weeks, and when phase E starts, the move can be really huge. When buyers hesitate and supply controls every bounce, the market isn't weak, it's transitioning. The question isn't if volatility expands, is whether you recognize phase E before the crowd does. And this is what you're seeing right now. You're seeing price literally like basically like having something in your hand and just dropping it. You see gravity just snatch that thing down. That's what's happening right now. So phase D tightening, and as you remember, range, drop out. So now we look at our chart. What were we doing with the SPX? We look at my rectangle. We was ranging up here. We if I draw another rectangle up here, we was ranging. But this is the range area that I wanted us to break. But right here, if you look, we were ranging. Where is it at? Range. Right here. This is what you call a range. A range is nothing but just consolidation. You just keep popping back in the areas. So that right there was the phase D. Then boom, phase E. Now look what phase E is doing. That thing puking. Nasty. So yeah, long story short, we got 610 to 600 on SPY. It's going to get real nasty. Real nasty that we just took out. That 6,500 level was important. Big level right there. Our Qs, I don't really talk about Qs as much. Nasty. 534. Yeah, 540, then 534. Nasty. Don't these this market right here is crazy. So Monday, don't be. Yeah.
My bad. Go ahead. I'll talk after.
So this market right here is crazy. Don't be surprised if you see. So this is why it's so important. If you don't know how to do support and resistance, now's the time to learn. So over here, I could be like, okay, candles bounce off candles, candles reject off candles, candles reject off candles. Look at the bodies of my candles. You need 2 to 3 candles that you could use in order to put your horizontal line. So boom. What I mean by that is the body of this red candle. You see that? I placed it right on the body of that. Why? Because I'm looking to the left, I'm looking to the right. When I look to the right, 1 candle, 1 body, 2 bodies. Then I look over here. Remember what I said? The wick confirms it. Once I see that, I don't need to see if any other body's touching my line. I know this is a good support right here. So you have to learn how to do support and resistance. And why is that at? Because watch it catch this over here where we're at now. And I guarantee we'll get a little bounce there, or we might bounce there. And this market, so the craziest rallies, I don't know if y'all heard this before, but it's so true. Go back to any recession. The craziest rallies happens in bear markets or recessions. The craziest rallies where you'll see it in one day just recover a huge amount and then sell all of it off the next following days. So don't be surprised if we come down here and then once you see it start going up, I don't pay attention to gaps, but you pay to all my ICT people. What is the most recent gap called? Not the ones that's far, but like this one right here.
I just call it a gap, or like a new week opening gap, or a new day opening gap.
Okay. All right, cool. So I really don't pay attention to them, but when they're like this, I'll keep my eye on it because I can see a bounce happening. I can see this happening right here. So I can see us coming down here and then popping back up. Candles bounce off candles, candles reject off candles, reject this candle right here, and then continue lower. Hit this, probably come up, test support to make sure it's resistance, then push down lower and go to your 534 or whatever. QQQs don't look good. You want to look at IWM. IWM is the small cap, so they really be getting smoked, and it's about to lose its 200. So we're not looking good at all nowhere besides oil and energy.
So that's really all right. Bitcoin. You know, we used to always worry about Bitcoin, and that's one of the confirmations I had to know that we was going into it. We're not there yet, so we could just say, what is it called? A pullback or correction. But I promise you, we're going to a recession, bear market. I promise you. So you could see before I was worried about Bitcoin a lot. Why? Because everybody wants. Let's keep it real. The dollar, U.S. dollar, was the backbone. Everybody, you go to other countries, they wanted our dollars. Like I was traveling the last few years, and I go to like Jamaica and places like that. They don't want our dollar. Africa, they don't want our dollar. So Bitcoin is where that money is going. So we followed Bitcoin. Once Bitcoin slipped down and went into this bear market, I knew that we was entering ours. Bitcoin's bear market is crazy. Their drawdowns is around 70 to 75%. And that's why I said 55K was one, and then 45K. And I posted this in the Discord. This was the first line that we had to break. And I didn't even notice that we broke it. And then on top of that, we broke both of them today. But we got 5 hours until closing. If we close below this one right here, buyers better hope they defend this. Because if they don't defend this, forget about this 59K right here. You're going to 45K in a flash. There's no liquidity down here. It's like thin liquidity. It's not too much. You're going to drop so fast on Bitcoin. Bitcoin drop is ridiculous. And it's not over yet. It's not over. See, once it loses this green line right here, not much liquidity. It gets thin. You're going to drop straight down to 45K. And don't be surprised if you lose 45K and 35 and you see 35. Don't be surprised.